everyone for joining us today. Now it is time to hear from one of Malaysia's largest conglomerates, Berjaya Corporation Berhad, which recently unveiled its 3-year strategic plan aimed at transforming the conglomerate into a more focused group. With us, we have its CEO, Encik Rashid, the first non-family member appointed to lead the group. Encik Rashid is also the former Permodalan Nasional Berhad CEO and brings with him more than 18 years of investment and business leadership experience. Without further ado, I'd like to welcome Encik Rashid to share with us some insights into his transformation plan and the company.
Yeah. Thank you very much, Sasha. Thank you very much, everybody, for your time. I thought I'll just go through a brief presentation just to kind of put in context what the state of the company is and what we are attempting to do. The first slide. Yeah, so if you look at Berjaya Corp today, this is how it looks like, right? You know, it's got an eclectic brand of companies, and you go to our website, you know, it'll be just an endless amount of companies. And on my first day on March 16, when I went around and saying hello to all my new colleagues, I did ask them about what does Berjaya mean to you? And that was a question that was very difficult to get an answer, simply because we've had all these brands, right? You know, it was difficult to pinpoint, are we a property company? Are we a food company, automotive or services? What are we? And that is when I knew that we needed to get the definition and focus of the group absolutely right. Because when it's like this, you end up kind of just scratching the surface of most of the companies without really going deep. I have a huge preference of focusing on a few core businesses and doing it absolutely well. Thanks. So this is what we articulated internally. You know, I spent a lot of time internally with our colleagues to kind of put the message in this sort of like a pyramid, right? The first thing is to get the vision right. To my earlier point, I wanted to morph the group from a conglomerate to a consumer group. You know, as a conglomerate, it's a bit like, you know, I do everything and anything, and that's not really how I want to take the group further. I want it to be focused as a consumer group, meaning that whatever that we have and will have in the future will have a consumer stance towards it. We are a global group. We have operations in over 12 countries globally, and I do want to position it as a global consumer group, not just purely a Malaysian consumer group. So that's the vision. The mission is really unlocking value. I think one of the big criticisms of the group in the past has been that it sits on incredible assets, but it doesn't kind of reflect in the value of the company by way of its valuation. And that is something that we need to do a better job unlocking, which means running the companies a lot more efficiently, transparently, and also really streamlining the group, you know, and raising money by selling some of the assets that we have. The objective is really to institutionalize the company, you know, moving from what has traditionally been a company that's been run by one person to be run as an institution, governed by proper systems and processes, and to really streamline the businesses that we have. We just can't go on having all that many businesses in there. It's really a question about what is really going to move the needle for us and focusing on that. On the strategy part is getting the performance monitoring and execution right. This is where I think when I deep dive in my first 3 months, I realized that this is what has been lacking. We have been quite successful in terms of acquiring companies and assets and brands, but not very good in terms of keeping in touch constantly on terms of monitoring, in the performance monitoring and the execution part of it. So we need to put in place a lot more robust procedures where we are able to kind of do KPIs and monitor this on a timely basis, especially on a monthly basis, to know exactly, are we on track, are we not, do we need to pivot or not. Approach, there needs to be a rethink about the operating model. I've been quite public by saying that we will sell the Berjaya branded hotels and focus purely on the 5-star brands, where I want to just be the hotel owner, not the operator. I think this is where there's a complete restructure in terms of its operating model, where in the past we have owned and operated the hotel. And this is something that I want to also change within the group, that, we don't need to own and run everything. If we do property, for example, we can be the master developer, but if we need to have, say, a school or a hospital, we bring in an expert operator there. We don't need to run the school. We don't need to run the hospital. It's the same thing with hotels as well. I think where we have been good is identifying where it makes sense to own hotels and identifying the right operator, but not really to then worry about how to run the hotel. And then lastly is usage of digital and data. We're one of the few companies, I think, in the country that has a touch point with every element of society. We have brands that cater for the lowest, segment in terms of earnings, economic segment, right up to the highest. And it'll be very interesting for us to kind of use digital and data a lot more better. Like, for example, how many Berjaya group products are in a household, for example, how many people consume a Starbucks and use their Be Infinite card and have a property and everything. So this is what digital and data is able to bring. And this is something that I want to emphasize a lot more. Next. So this is how we have reorganized the group from that first chart that I showed you to this. Essentially, what we have articulated is that we want to focus on 5 core sectors: retail, food, property, hospitality, and services. And under retail, we would have all our distribution-focused business. Anything that has a outlet kind of business would be under retail. And then food would obviously be our food brands like the Starbucks and Krispy Kremes of the world. And property, where we would have our property development, which is redevelopment of our existing land bank. Investment properties, where we do own some office buildings and some malls. And affordable housing. Affordable housing, I want to do it under a different brand altogether, so that it doesn't cannibalize the brand name, and so that they're a lot more focused. In hospitality is resorts and the clubs, but the clubs over time would be reduced, because most of it is sitting on prime land that we will then redevelop. And then under services, we have the gaming, which remains a cash cow for us. Environment, we have a very profitable business called Enviro Park there, which does landfill in Malaysia, in Bukit Taga, and also in Philippines, in Pampanga. And then we have digital services as well. We have a number of digital companies, like we have a 49% stake in Razer Fintech, and we own a data analytics company and also the Be Infinite loyalty card program. Recently, about a few weeks ago, we have created a new entity called Berjaya Digital, Be Digital as we call it for short, that is housing all those 3 digital companies under one roof. The whole idea is that so that this Be Digital can be independent when it comes to funding, when it comes to the way it runs business, because it's a very dynamic and fast-moving business, and I don't want it to be caught up in the larger within the larger group. Next. So this is how our revenue contribution looks like, right? The chart in blue is pre-COVID, is end of March. That was just before we did our first MCO 1.0. And then the orange chart shows you end of March, a few months ago. So that has taken the full impact of the COVID and the various lockdowns that we've had. So you see in retail, we've actually had an increase in retail. No surprise there. I think a lot more people are more focused on trying to get the best deals in terms of pricing, and they're staying a lot more at home and cutting down on, I guess, more luxury purchases and focusing on core purchases. We've done a bit okay there. Food and beverage, we've done a lot more better, as we moved a lot of things towards online, like many others as well. Property as well, we've seen a slight increase, but this was a bit of a back-ended effect, where when we kind of register some of our sales and everything, it gets recorded a bit more later. Hospitality has seen the biggest drop. No surprise there. It's been severely impacted as a business because we just can't. There was a small window over the last 1 year where we were allowed to do domestic tourism, where it recovered pretty fast. But after that, it's come down. And this remains the most challenging part of the business because there is an element of fixed costs that we have to endure. Because you can't just switch off the cost and maintenance aspect of the hotels. Under services, it's been dragged. I think it's been dragged a bit by Toto as well. It's a very, very regulated business, the gaming industry. Yeah, a lot of the outlets remain closed because of the MCOs and EMCOs. I get asked this question, why isn't Toto doing online? Question is, we're not allowed to. It's not that we don't want to. We've been wanting to do it for the last 10 years. We're not allowed to. If you thought the banks were very tightly regulated, this is an industry that's even more regulated. So we just can't. The rule book doesn't allow us to do so. Next. These are the 4 key initiatives. So if you break down the strategic framework that we announced, I've really kind of broken it down into 4 parts. Right? The first part is streamline. These are the parts of the business that we are already doing, but we need to do. We need to improve by slimming it down even further, or being a lot more tighter and focused. So first thing is sub-segments. Sub-segments is that if we want to go into the consumer space, what is it that we want to do, right? What segment of the market are we trying to penetrate? Like, for example, if you want to be in hospitality, you want to do 2-star, 3-star, 4-star, or 5-star. The running of hotels in each of these categories is completely different, from branding, from the people, from the hardware, software, food, procurement, everything is different. So we've got to be very clear. This is perhaps why maybe in the past we've not really done too well there, because we've kind of tried to take that same model into doing all the different segments. And now we're very clear in hotel, we're just going to focus purely on 5-star, and the burden of running it is going to fall on an operator and not on us. Similarly, for some of the consumer and retail brands that we have, like Causeway, we are going to close down our overseas operations and focus purely on Malaysia. So the sub-segment is really not just looking at the products, but also looking at the geographies that we operate in. Divestments, there will be a series of divestments, I'll go into that later, that we need to divest to just lighten the balance sheet a bit and just be a lot more focused. A lot of these assets were acquired during the past for very low rates right now. When you look at it on the book, it's all fully written off. So it might be a good time for us to sell this. And then also mergers. Over the years, as we acquired companies, there are a number of overlapping companies. So over the last 3 months, I have merged some overlapping companies to make it a lot more streamlined. We have almost 80 dormant companies within the group that have since been closed over the last month or so that the group is a lot more leaner. In terms of improvement, these are things that we do already, but we need to do a lot more better. So one of it is succession planning. Excuse me. We do succession planning, but we need to do better in it. And then compliance and governance as well is something that we do. We have a process, we have a framework, but we just need to do this a lot more better. Business empowerment. This is something that I've been very vocal about, is that Berjaya Corp is an investment holding company. We don't run any of the businesses ourselves, right? We don't run Starbucks from Berjaya Corp. We run it from Berjaya Food. So there is a need for us to behave a lot more strategically rather than operationally. And this is where we need to give that sort of empowerment to the various business units to kind of run their business on a day-to-day basis. Where we come in is really putting in place a strategic framework, giving them the KPIs and deliverables so that they deliver and then they pay us dividends. But it's not for us at the B Corp level to be deciding where they open branches and what they put in the branches, right? That's getting very nitty-gritty and operational. And this is where I've kind of put that demarcation between strategic and operational. Third is restructure, which is a complete rethink of the operating model. I touched on that briefly just now, like the hotels, for example, where we need to morph from a owner-operator model to a purely owner model. And then corporate structure as well, where we need to kind of flatten it. There is a lot of cross-holdings as well, as most of family-run companies are, and that is something that I'm committed to undo. But with caution that it will take some time. It won't be done overnight because it's a function of also how the share price does in some of the companies, so that it is above water, and then we can undo it. Flatter organization as well. I think in a way the organization is a bit old-fashioned in the way decision making is done, and we need to kind of flatten that a bit. Fourth is establish. Establish are things that we don't have that we're establishing right now. That is performance monitoring and KPIs. We've put in place a KPI and corporate scorecard for every business that we have, and how many percent it will make up towards their annual performance, which includes everything from succession planning, cost management, sustainability, financial performance, non-financial. There's a complete rethink on cost management. I think as you grow, and the companies are a bit siloed, there is an element of cost duplication around. For example, just within the first 3 months, just from digital as well, we've kind of cut down nearly about 2 million ringgit a year, just by kind of harmonizing that whole infrastructure a lot more better, and a lot more efforts is being done to kind of see what can be shared with all the companies, what can be shared with all the companies, and then what needs to be done independently. And then the last is digitization and sustainability. I say this is a must-have right now, not a nice-to-have, because we have to digitize. There's no way about it, and we also need to make sure that we don't go on hiring a lot more manual labor, and that we do a lot more things where it can be automated. We need to automate. So the 4 parts here is really to break down into is to give a clear structure into what is it that needs to be streamlined and made a lot more slimmer, what needs to be improved, just take it up a notch, and what needs to be restructured, a complete pivot, and then what needs to be established, which needs to be built from ground up. Next. So in terms of streamline, if I were to go a bit deeper, if we just focus purely on streamline, in retail, for example, I think country expansion is something that we have been really reducing. Causeway is an example where I think it has over expanded geographically over the years, and that is something that we have been reducing. So by the end of the year, Causeway's business outside of Malaysia will all be closed. And then we'll focus purely on Malaysia. The Malaysian business continues doing well, but overall it gets dragged down because of the losses in other countries. And that's also a manifestation into how B Corp's financial performance is. A lot of the questions investors ask me is that how come the group makes 8 billion ringgit in revenue, but is still loss making? And the reason, if you zoom in on the bottom line, is that it gets dragged down by impairments of losses of companies. And this is because we've got so many companies and we cannot monitor them. And, they don't necessarily do well. And then we have to kind of take those losses, accumulate it, and then it gets dragged down. So all the companies, I have 2 criteria. I told my colleagues, if a company is loss-making, I'm going to look at them a lot more closely, and most likely you're going to be shut down. And if the other one is, if you're coming back to me for money, that means I need to keep on funding you, and you're not financially independent, we also need to have a serious conversation. So in terms of where I have been putting my focus on in terms of closing down or selling and divestment is on companies that either are loss-making or need money from us. And that's where a lot of the focus has been. In food and beverage, where Berjaya Food is today, I think there's a need for us to look beyond F&B. I think in the past, we've always kind of looked at what is the next uh, uh, franchise chain that we can bring into the country. And perhaps maybe the way the consumer mindset is right now, we need to do maybe a bit of a change because franchise chains don't necessarily do very well unless you've got a fantastically strong brand. Starbucks is an exception. It's a lifestyle brand, continues doing quite well. But we've been looking at things like cloud kitchen. Can we look at upstream and downstream within the food? And that is something that we will continue looking at in the food segment. In real estate is, like I mentioned, we need to do a better job in terms of executing. I look at some property developers who can have land 1.5 hours away from KL, but they can sell their property at ringgit. And then you dive inside. Why is it that they can? Is that I think they've created quite a lot of surrounding infrastructure and made that place a lot more livable. And that's where the value creation comes in, is the ability to kind of develop that a lot more better. And we've got a lot more prime land, things like Bukit Kiara, Selangor Turf Club, and Bukit Jalil, Ampang, where the value is already there, but we just need to do better in terms of the product that we deliver. In hospitality, I mentioned an operating model change and perhaps a rebranding of the division, where we take out the Berjaya name and have a completely independent name that will then eventually have a hospitality REIT that will be consisting of all mainly 5-star hotels. And then under services is we really need to do better in digital and data. So a lot of things that we do in services would be what I would call future, that we want to do things that have a sustainability element and has legs to run for the next 10, 20 years. And it has to be something along the more sustainability and digital and disruptive space. Next. So in terms of improve, I think like I said, I think in terms of people, like anything that we do, the hallmark is the people. If you get this wrong, then your whole strategy goes wrong. That we need to bring in a much more robust pipeline. Compliance and governance, I mentioned elimination of cross holdings, establishing KPIs and monitoring, risk management, and just making better data-driven decisions, right? Not making gut instinct decision, but backed by sufficient data. Business empowerment, how B Corp will look like in the future is that we are a pure strategic investor, and that we have the 5 companies under us, the 5 holding companies under us. And all those individual companies under those holding companies will all have a dividend policy, which will flow up and eventually flow up to B Corp. So B Corp would impose a dividend policy on all the companies, and we will have our own dividend policy so that we have a recurring income that comes in on an annual basis. And then we have the ad hoc income, which is when we sell some of our assets and everything. Because at our level, what we are is we are essentially an asset allocator. We decide, if I have a ringgit to spend, where is it going to go? Do I put it in retail? Do I put it in food? Do I put it in hospitality? And how do I decide the return for this 1 ringgit? What is the ROI of this ringgit? So that is what we should be doing at the B Corp level, not really be thinking about what do I sell in a 7-Eleven aisle, what new product should I be bringing in, right? That is a very operational day-to-day decision that the individual companies make. Next. So in terms of restructure, we said that in terms of divestments, over 2 to 5 years, we would want to raise 2 to 5 billion ringgit. So our year end is June. So we just started our new financial year end in July. So the next 2 financial years, so we are in July 21 now. So July 23, we should have at least raised 2 billion ringgit in divestments, and 3 years later, a total of about 5 billion. This will involve a number of things, potential IPOs, partial stake sell downs, M&As, or even outright sale. 3 to 4 companies will be rationalized. We're doing an internal restructuring of what I call legal entity rationalization, which I'll touch on later. And also target debt. Target debt is As a holding company, our debt is consolidated. So not all the debt is at the B Corp level, but as a holding company, we need to aggregate all the debts of all our companies, and then it becomes the B Corp debt. And I want to reduce that, and a lot of that will be reduced as we slim the company down. As we sell, we will pay down the debt and then get to about 2.5 billion. And a lot of these debts sit at the operating company level, not really at the B Corp level. So, for example, the property company has debt because they need to kind of build properties, where they need to gear up. The food company has debt, retail company has debt, and all that. But as we start divesting and making the group a lot more slimmer, this debt will also reduce automatically. Next. So on the restructuring plan, we said that hospitality alone will raise about 1.2 billion ringgit in value. This will come as we sell 2 hotels in Seychelles, where we have 2 Berjaya hotels in Seychelles. We have 1 Berjaya hotel in Sri Lanka, and also the ones that we have in Malaysia, like Penang and KL. And then we also have the Sheraton in Hanoi, and also the Berjaya in Manila. And I've put a conservative estimate of 1.2 billion, but I think if we do sell all the hotels that I mentioned, it will be more than that. But 1.2 billion is the conservative estimate that I have, where this will include all the Berjaya branded hotels that we will sell. The ones not mentioned there, we would perhaps bring in an operator to kind of run it. Motor distribution, we announced about a month and a half ago that we're selling our stake in Peugeot back to Burma. We do have some minority stakes in motor distribution. Like, for example, we have a China car motor business where we bring in mainly trucks and industrial vans. It's a profitable business, gives us about 3 to 4 million profit after tax, but it doesn't fit in with the synergies and the core sector groups that I want. So that would eventually be sold off. We do have minority stake in Burma in Philippines that distributes Mazda cars. So we will sell those minority stakes, and also the MG Rover car business, which hasn't really started yet, but it's something that we intend to give up. So we will exit motor distribution completely, with the exception of HR Owen in the UK. HR Owen in the UK, I want to keep, and simply because it's a high-end luxury car business. It's very profitable for us. The clientele is rather unique and it's quite useful for us. And also that they're self-sufficient and independent. So they're I wouldn't categorize them as a mass market motor distribution. They're very high-end niche distributor. Gaming is something that Sports Toto, over time, I think that we want to morph the company into an ESG compliant company, that it could potentially be sold. And that is something that we would be open to, but given the nature of the business, it's not like we're going to have 100 people rushing through the door to buy it. But we're pragmatic enough to know that the way the group should look like in the future should not have the gaming element in there as we move towards a full sustainable business, and to also reduce sort of regulatory heavy businesses, and then we focus on a lot more businesses where we can kind of decide ourselves, right? Like retail, food, and hospitality. Then in financial, we aim to raise about 1 billion ringgit there, mainly through 2 big entities. One is Berjaya Sompo. We have a 30% stake. That's up for sale at 30%. I don't think we offer anything significant to the group. We don't control it in any way. Chai Lease is a leasing company that we have. We own 30% of it. 70% is owned by Chai Lease of Taiwan. It's a bit like a leasing company that gives personal financing. We got into it several years ago. Our stake for the 30% was about 45 million ringgit, and I reckon that stake now is worth about 300 million ringgit. This would probably go through an IPO process so that we can sell it down slowly in a liquid way. Of course, beyond these 4 that I've illustrated here, There are a lot of smaller ones that we have already started closing down and selling. That makes the odd 10, 20, 30 million here and there. And that is a process that we will continue doing until, until the foreseeable future. But the ones that will really move the needle in a significant way is the one that you see here. Next. So in terms of restructuring, legal entity rationalization as well, I think if you look at BLAN today, a lot of the value, the trapped value of the group is actually in BLAN, because BLAN owns all the prime real estate. It also owns all the hotels. It also owns Berjaya Sports Toto, who in turn own Berjaya Philippines, who in turn own HR Owen. So it's the most convoluted shareholding structure there. And the common question I get from investors who buy into Toto, for example, they say, why am I buying Toto? And then I have a Philippine company that has landfill in there. And then that Philippine company then has a luxury car company in there. So this one would be something that we are internally doing work now to clean up. I think the most obvious thing is that Berjaya Philippines would eventually be delisted. It's very low liquidity anyway. And I will put HR Owen back up to be directly under B Corp, under the retail pillar. And then BLAN as well, we hold it quite tightly. And I think it does make sense for us to at some point make a decision on this. And what we would like to do is to take out all the real estate assets outside of BLAN and put it under a new company, which we will do, and then have that new company be a pure play real estate company that will eventually be listed in a few years' time, and then so that all the companies will be pure play. So you'll have a pure play real estate company, you'll have a pure play gaming company which won't have anything else, and then you will have HR Owen going into the retail portion of the group, and it won't be under any of this land or gaming. Next. So in terms of establish, I mentioned just now, there's a need for us to do KPIs and performance monitoring better, debt restructuring. When I say debt restructuring is to have a better rethink about when is it that we take long-term debts versus short-term debts, when do we take bank loans versus an MTN, matching the tenure, for example, of the loan in a much more robust way. These are something that we are currently undertaking in order to restructure the debt. Centralizing procurement, distribution, this is quite prevalent on the retail segment, where there's a lot of warehousing, distribution and logistics that will be the most impacted here. Digitization, I mentioned demarcation of what is a strategic role at the B Corp level versus operational role, and also the closure of dormant companies. Next. So we've established a management committee. This is a committee that meets monthly, that's chaired by me with all the people here. The ones in blue, the chief strategy officer recently joined about 6 weeks ago. She's the one who's the team would be the one helping me kind of execute the vision, oversee the divestment, investment, special projects, and everything. Essentially a CEO office of sorts that would be doing the KPI, corporate scorecard and all that. We have a chief digital officer who took on the role a few weeks ago to kind of digitize the company. So we do digitalization individually at each of the operating company, but there's a need for us at the top to bind everything together, and that's what the chief digital officer is doing. In terms of there'll be a new chief people officer, new chief treasury officer, new chief comms officer who will be joining within the next 2 months or so. And then in terms of CFO, legal and investment, they are existing people. So it's the management committee is a nice blend between an internal promotion, which is the chief digital officer, existing people, the one in black, and new people, the one in green and blue. And so that's how I have structured the management committee, which will meet monthly to really put everybody on the same page and to make sure that we are on top of things and much more proactive rather than reactive. Next. And then in addition to the management committee, I've also established a business committee which I also chair monthly with the heads of each of those business sector groups. So the head of property, the head of hospitality, services, retail, and food would meet me monthly. So it's an exco of sorts that I chair, so that we're on top of things operationally. We know what's happening, what we need to be aware of, what's working, what's not working. Do we need to change plans or not, and everything. So this was this management committee and this business committee was in the past never kind of formalized. It was something on an ad hoc basis, but not on a regular recurring basis. But now we've put it properly, we've structured it properly. It has an agenda, it's chaired, the meeting minutes are sent, it's followed through. There's a lot more rigor and structure in this, and this has started being done this month. Next. So in terms of sustainability framework, like I said, digitization and sustainability, two things that must be done. It's no longer it's nice to have, it's a must have. But I am keen to do sustainability in a way that is understandable, not just a box ticking exercise. And essentially, again, taking the premise of what I've always mentioned, that we are a holding company. We are not there to kind of force companies to do and ask them and tell them how to run. Sustainability is already done individually in the hotel group in your own way, the food group in your own way. The framework that we want to establish at the B Corp is binding all these things that the companies already do and putting it as an overarching framework. So it's not to duplicate what they're doing, it's to kind of see what are the good things that each of these companies are already doing, and how can we then put it as a B Corp sustainability framework. Next. So a digitization framework as well, we do it already in various companies in terms of automating. I always said that in digitization, you need to automate first before you can innovate, right? You cannot talk about AI and fancy data analysis when you're still peddling paper around. So you need to kind of automate first, and have a digital culture going. So it's really about having your data sorted, cleaned before you can mine it. So in the data accessibility is really about getting your house in order data-wise. We are, I think, about 80% there in terms of automating. And then once we are, and by end of the year or early next year, we'll be in that data mining phase where we can do some early stages of data mining and being able to see, hey, we have a lot of customers that are centralized in this particular area of the country, and they spend X amount of money. So those are the kind of data that I would like to mine and be able to kind of share, perhaps next year. And then once we get a clear sense of that, could we then monetize the data? Because we do sit on a lot, and that's something that we could potentially even look at. Next. So how would B Corp look like in the future, 3 years from now, right? So this time, 3 years from now, July 2024, I always said that whenever any initiatives are done, we must always ask, how does success look like? How can you look back and say, this was a success, it's worked? For me, success will look like this. In 3 years' time, this is how B Corp should look like. So I started the presentation with the first slide, which was all the brands all over the place. In 3 years' time, this is how it should look like. We would have a retail and food business that is listed. I don't rule out the fact that maybe retail and food will be under one division later in the future, because there's a fine line between both those businesses. We could potentially see one day a retail and food business being combined that holds our retail business, our food business. I said that Hartana, that's a code name that we've given, but this will be the pure play real estate entity after all the restructuring and legal entity rationalization is done. And then in hospitality, where we would just be purely a REIT, a real estate investment trust, which owns 5-star hotels, which is managed by somebody else. So we're no longer going to be owning and operating. So when that happens, our manpower costs would reduce substantially, because we no longer would, they won't longer be under our P&L. And then under services, we would have the environment business, which one day I would like it to be listed because it's in a very good space. And then Berjaya Digital as well. So this would be in 3 years' time how the group will look like. Very focused, very clear. They will all have their own individual management, their own CEOs, their own boards, and then ultimately all these 5 entities would be paying a dividend up to B Corp, which we will then have a recurring income coming in every year. Next. Okay, with that, I end the presentation. That's just to put everything into context about how the group looks like today and what we're doing from now until about 3 years and how the group will look like in 3 years.
Okay, thank you so much, Mr. Jalil. That was truly a very transparent, and thank you for sharing all your experiences and knowledge and how you're going to basically transform the Berjaya Group. So we have a few questions here ready for you. Someone has asked, how can B Corp sell B Toto without taking the takeover of B-Land when B-Land owns 40.5% direct controlling shares in B Toto when B Corp only has 8.57% direct shares in B Toto?
So that's where the legal entity rationalization would be done, right? So I said, in order for us to get to that in that position, we need to restructure a lot of the companies. So that's how it will be done. We're working out various permutations. It's not so clear cut. I've looked at various drafts, but we will eventually get there. I think we'll share the details when we have decided. But we're well aware of that because of the convoluted shareholding structure. We need to untangle a lot of things before we get to that and be in a position to be able to sell. Which is why I said that that won't happen anytime soon. I think what we're focused on right now is to just get the legal entity rationalization done at the bottom level, more at the Philippine level, before we move up there.
Okay. So the next question is, Redtone, a well-managed subsidiary of BJ Corp, is there any plan to bring up the comp business to the next level? If yes, can you please give some insight to us as investors?
Yeah, so Redtone separately listed. I'm the deputy chairman there. I think we leave Redtone to be run the way it is. It has its own independent board. But I think Redtone is in a nice space because it's an MVNO. It's not the DG and Maxis of the world. And I think when we started the company, it was always meant to be an MVNO. And I think several years on, I think that's the right decision, because if you're looking at what's happening with 5G right now, with Digital National running the infrastructure, that practically makes everyone in the country an MVNO. That makes Maxis an MVNO, Axiata an MVNO. So we're in that spot. But that's really not been our key focus to go in and compete with those big boys. What we have been doing and where the revenue has been growing for Redtone is really on the cloud computing, on doing the back-end infrastructure digitization work for companies. We do Wi-Fi wiring for business premises, for enterprises, cloud computing, Internet of Things, and doing all that, I guess, the unseen, less sexier stuff behind the scenes when it comes to telecommunications and everything. And that is where we have been growing and want to continue growing, because that brings recurring income. And for me, I think as a strategy, I'm very obsessed about that. I like companies that have recurring income. I do feel very uncomfortable with companies that has income that comes in a very choppy way. And we can't get rid of ourselves from that, because we do have the property company that would sell and we'll see income, and sometimes we won't see so much of income. But there's a need for other companies and other businesses to kind of balance that out. And that is where Redtone would be going. I think if you look at Redtone in the future, how it will look like is that it will be a very digitally centric kind of firm. and it's called Digital Berhad right now. We took out the telecommunications name to kind of reflect that sort of where it would be going in terms of still being in the communication space, but a bit more digitally focused.
Okay. So on a side note, somebody said, did you realize that your son was behind you during your presentation? That was very cute.
Yeah, it's my daughter. Yeah, they always video bomb me all the time. Yeah, parents are working from home. Yeah.
Okay, so the next question is, what is your biggest challenge in changing a previously family-owned business into an institutionalized organization?
I think it's always the culture. I say the easiest thing doing transformation is changing the business, right? Changing the business model, operating model is, I think, for me, the easiest part to do. The hardest would always be the cultural and mindset shift, right? And that's not going to happen overnight. That is something that is an internal propaganda that needs to be explained and communicated again and again and again, right? I send out CEO newsletters every month. I do town halls. I meet people. I harp the same message again and again. That's something that you just need to do over time. But I think most importantly is to institutionalize the firm. That it is moving from a firm where one person has made a decision into a firm where decisions are made in a much more structured way, documented, communicated properly, with various permutations of risk and what can go wrong and what can go right and all that. So I think that is what I would like to leave behind. If when I'm no longer in the job, that is what I would like to leave behind. A firm that can, somebody that can come in to replace me and run the company seamlessly. And those are the processes I'm putting in place. I'm not, I don't like companies that walk, talk, and breathe the same way. And I think that's very unhealthy. For me, culture, the most important thing, culture is how people behave when nobody is looking. That is how you define culture, right? And for me, if all of them know exactly what the strategic goal of the company is and how I want them to move into that direction, then I think my job is done. But the journey there won't be done overnight, right? And I think I think there's an element of getting used to as well. I'm a lot more transparent. I'm a lot more forceful in certain things. So it's just something that people need to get used to, and I get used to it as well.
Okay. Next question is, what is your biggest? No, sorry. Any timeline or target period of the listing of U Mobile?
Well, U Mobile is not under B Corp, right? So I always say that the things that are not under B Corp that people always get confused about is 7-Eleven is not under B Corp. That's under Tan Sri Vincent personally. So, and 7-Eleven owns Caring. So by virtue of that, 7-Eleven and Caring are out of B Corp. U Mobile is out of B Corp. The football clubs are out of B Corp. U Mobile is what I understand is that I think we did on the private side, they did kind of look at listing it about 2 years ago. But at that point in time, we just felt the time wasn't right. But today it is EBITDA cash flow positive. It's a profitable company, and I think the time is right. Whether the market is prepared, given that it's been a bit weak, I'm not sure. But I think we are targeting maybe early next year to list it. Yeah.
Okay. Now the next question is, what is B Corp's plan to resolve the public share spread issue only 13.2% at BLAN? Is B Corp planning to take over balance of BLAN 13.2% minority shares?
Yeah, so we've got until, if I'm not mistaken, until December to resolve the free float. Look, I think I'll be very honest here. I think the company is really undervalued, and it's undervalued. And I'll be very blunt here. It's undervalued for a reason, right? Because I used to be a fund manager. I used to analyze companies for a living. And when I took on this job, and I had 8 months of discussion with Vincent. Vincent asked, as a fund manager, did you ever invest in B Corp or B Land? I said, never. I will never invest in it. You know, why? Because I don't understand what you have in it, right? You may have so many businesses. And that's why when I came in, I wanted to really be very transparent. What would B Corp own? You know, those 5 main sector groups. And then under B Land as well, we need to clean up because there's just too many moving parts in it. I think it's a lot more easier. My feel is for us to restructure if we take it off the market. So that could be potentially something that we may look at. You know, given that you know the shareholding structure and the number of companies in there is a bit convoluted. It's a bit. So we are also exploring potentially that. Yeah.
Okay. So as a local conglomerate with a strong voice, what has Berjaya done to help the current suffering by the people due to COVID-19?
Yeah, so you know, every single month we give out nearly about we give out a lot of food aid, food baskets. I've stopped all other CSR activities since I joined, and I have said that the only CSR activity that we are going to do is giving out food baskets to people. And these are 100 ringgit food baskets that we give out, and it's very generous for 100 ringgit because we're able to source it much more efficiently. You know, so you got eggs, rice, noodles, crackers, everything, cooking oil, everything. So it's generous enough to last a family of 4 for about 1 month, quite generously. And that we have been pumping that out as much as we can, right? So we give out several thousand bags on a monthly basis. We do what we can, but I have to be honest, we get inundated with requests for it, right? You know, the situation is, you know, I don't need to reiterate it. You know, it is, you know, it is quite bad. And we do what we can. So I think for now, I think we support a few thousand households in terms of food bags, and we continue doing that. Our food business gives out and helps supports the frontliners in terms of meals. So I think, if I'm not mistaken, B Food supplies coffee to and donuts and snacks and food to all the frontline hospitals as well. And that's what we continue doing as well. So on the food business, we've been giving out food to the frontliners, and on the individual company level, we've kind of pooled everything and been giving out food baskets. Yeah.
I think we have time for a few more questions. The next one is, do you have a long-term monetization plan for Berjaya Digital? For example, IPO, stake divestment to strategic partners. And can you remind us what digital business that you own?
Okay. So what digital business that we own? We own actually 3 main businesses. So I mean, I don't include Redtone in there because they're separately listed, and then, you know, they're quite big in that sense. But the ones under Berjaya Digital, the one that we have, the new holding company that we have incorporated, is one is called NIS. NIS is called Natural Intelligence Solutions. It is a data analytics company. So what NIS does is an end-to-end. I chair NIS. It goes to companies and cleans the data, sorts the data, and then mines the data, builds digital dashboards, does the artificial intelligence, all the funky stuff. So a lot of their clientele are FMCGs, consumer companies. They kind of map how sales are for consumer companies, what our products are being sold, who are buying it, where is the area people are buying it. We do mapping for retail outlets where they should open shops and everything. And that is something that we have. It's profitability is there, a small profitability, but I want to take the company up, and they've been doing a lot of work for the Berjaya companies as well. The person who runs NIS, Dr. Farouk, is also the B Corp Chief Digital Officer. So that's one company. The other one is Be Infinite. Be Infinite is our loyalty card program. They're a bit like, I guess, if Touch and Go and Bonus Link were to get married, their child will look a bit like Be Infinite. So Be Infinite somewhere in the middle there. It's got 7 million user database. So there's a lot of room to monetize that further by way of a digital wallet and all that. So that's the second company that we have. And the third company that we have is the 49% stake we have in Razer Fintech, which does the fintech. A lot of questions I ask is, with Razer be doing digital banking license? I think we tried for the digital banking license in Singapore. We pulled out of it because the paid up capital requirement was too high at 1.5 billion. We looked at Malaysia. We also pulled out because I think it was a very, very crowded space. Given that only 5 licenses were being given, I think we had over 80 players kind of forming consortiums amongst themselves, and we just kind of couldn't really find a partner or a fit that we can play. But the fintech business as it is today does quite well. So we do the payment gateway for many of the outlets. So you don't see it upfront, but if you were to do an online transaction, the back end payment gateway of Razer, that is something that we do. The gross transaction value is pretty high and it's been improving, and we expect to make a profitability next year. So all these 3 companies are under Berjaya Digital. Do we plan to monetize it? Yes, eventually over time. How we plan to monetize it, I'm not really sure. I can't give an answer right now. But I think the whole idea we created Berjaya Digital is so that there is, if we need to bring in a venture capital partner or strategic partner, they can come in at the individual company level, or they can come in at the Berjaya Digital level. And that's why we've kind of spun it out, put it a bit more separately to allow us that flexibility later on if we wanted to do any funding.
Okay. So I think we can basically answer one last question, which is, do you mind sharing what ESG initiatives are being taken by BJ Corp?
Okay. So, when you look at ESG, right, a lot of people focus on the E, a lot on the E, not so much on the S. So I think we want to look at it a lot more holistically. So obviously on the E, our environment business is for those who are in the environment business, you would know that our EnviroPark business, the way we run our landfill in Bukit Taga is like the Rolls-Royce standard of environment management, and we're very proud of that. It's a technology and a process that we have done very successfully and taken that out into Philippines. And then on the hotel business as well, we've been doing a lot more work on sustainability on the E side, in terms of rainwater harvesting, getting rid of our plastic usage. And plastic usage is something that we've been trying to get rid of across the group, not just within hospitality. And for me, that's the easy win there. And as we embark on digitalization, our paper usage and all that becomes a lot more lesser, right? On the S part, we do a lot of work with local communities in where we operate. Don't forget, we're not just here, but we're in many other countries as well. We're the largest hotel owner in Iceland, for example. We do a lot of community work in Iceland. In Redang and Tioman, for example, I think we're the largest employer there. And we do a lot of work with the social and with the local community there. And this is what I want our sustainability framework to kind of capture. And I think that question that you asked is the same question I asked my colleagues when I first joined. What do we do? And we do very good things in pockets and bits and pieces, but there is a need for us to bring everything together and kind of put it up as an overarching framework. So I think there's more work that we can do on ESG, and I admit we're not starting from zero. We're already there. But I always want the bar to be raised higher. I think in G as well, I think one thing I want to do is improve the governance of the company at the B Corp level, and also the transparency, the cross-holding structure and everything. And the fact I'm here talking to you and being quite transparent with it is also, for me, an improvement of the G aspect of it, right? So I look at it a lot more holistically. I think some people focus a lot on the E part, on ESG, you kind of lose focus on the S and the G. And I want that to be together. The S is a lot more pronounced now, obviously, during the pandemic. I think we're all asking ourselves, what is our social purpose as an entity? And I think we've kind of, over the last 6 months, really kind of found that purpose. The purpose is really to just let's help as many people as we can, and we standardize the help, right? We're just going to do this just to keep things going. And I think over time, we want to kind of have a proper overarching framework for that. So for me, it's not really doing complicated things. I think, the fancy answer would be that I want to sign up for UNPRI, do this, do that, and everything. I rather keep it real and do things that people feel the impact. I think giving out a food basket to people is a lot more satisfying for me. Being able to kind of do better things for the environment is also happy for me. But I think a lot of people don't know the stuff that we do on the S because we don't really talk about it. And this is something I've had a debate with internally, and I don't want to make a big fuss about it because I don't want to take joy in people's current misery right now. So I think we'll just keep that very private and do what we can. Yeah.
Okay, so this is not a question, but someone stated, this is hi Jalil, not much of a question, but hoping that Krispy Kreme will make its way to Penang.
Yeah, our food business is quite interesting, right? Because Starbucks initially, we thought that we would at 300 outlets, it would reach saturation stage. But today, it has surpassed 300 stores simply because we've tweaked formats. We've done drive-throughs. Drive-through has been incredibly, incredibly popular, especially during this pandemic right now. And if you do follow me on social media, you would see that a lot of our new concepts in the food have been trying to do a drive-through, but putting all our brands together. So you have a Starbucks, you have a Krispy Kreme, and everything, and that's something that we are exploring. Penang is one place that we're exploring. So if it works, and yes, it will come through. Yeah.
Okay, thank you so much, Mr. Jalil, for joining us today, and thank you so much for answering all the questions. I hope you enjoy the rest of your weekend.
You too. Thank you.